Ever wondered why good credit is so important? Well, let me tell you, it's like a golden key unlocking doors to a world of opportunities. It's not just about borrowing money, it's about financial freedom and flexibility. Good credit can be your best friend in various aspects of life, from buying a home to starting a business, and even landing that dream job. In this video, we're diving into the 5 major reasons why good credit matters. We'll talk about how it can help you get approved for loans and credit cards, score lower interest rates, and even snag better insurance rates. We'll also explore how a good credit history can make you an attractive tenant and potentially give you an edge in the job market. So, buckle up as we take a journey through the world of credit. Let's demystify the magic of good credit and see how it can work wonders for you. Number 5 on our countdown, access to loans and credit cards. Now let's delve a little deeper here. You see, good credit isn't just a fancy term that bankers like to throw around. It's a key player in your financial game and can significantly influence your chances of getting approved for loans and credit cards. Let's imagine for a moment that you're a lender or a credit card issuer. Before you lend money or issue a credit card to someone, you'd want to be sure that they're going to pay you back, right? That's where credit history and credit score come into play. They're like your financial report card, showing how well you've managed your money in the past. Let's say you've been consistently paying your bills on time, you've not maxed out your credit cards, and you've shown a responsible attitude towards your financial obligations. All these actions contribute towards a good credit history and a high credit score. And when lenders see this, they see you as less of a risk. As a result, they're more likely to approve your application for a loan or a credit card. On the other hand, if your credit history is scattered with late payments, high credit card balances, and other negative factors, your credit score is likely to be lower. In the eyes of lenders, this makes you a riskier bet, and you may find it harder to get approved for loans and credit cards. But don't fret. If your credit score isn't quite where you want it to be, remember, it's not set in stone. You can always work to improve it. Pay your bills on time, reduce your debt, and keep your credit card balances low. And over time, you'll see your credit score rise, making it easier for you to access loans and credit cards. In essence, a good credit score opens the door to financial opportunities. Coming in at number 4, the benefit of lower interest rates. Now let's dive into this, shall we? Picture this. You are at a car dealership ready to make a purchase. You've chosen the perfect car, negotiated a price, and now it's time to finance. This is where your credit score comes into play. Here's the thing. Lenders, whether they're car dealerships, banks, or credit card companies, they all want to know one thing. How likely are you to pay them back? And the way they determine this is by looking at your credit score. If you have a good credit score, lenders see you as a low-risk borrower, and low-risk borrowers get the best interest rates. So what does a lower interest rate mean for you? Well, let's say you get a loan to buy that car. A lower interest rate means you'll be paying less money back to the lender over the life of that loan. It's like a discount on the cost of borrowing money. And who doesn't love a good discount? The same applies to credit cards. With a good credit score, you're likely to get a credit card with a lower interest rate. That means if you carry a balance from month to month, you'll be paying less in interest charges. It's not just about the money you borrow, but also about the money you save in the long run. And these savings can add up. Over the life of a loan, a lower interest rate could save you hundreds or even thousands of dollars. That's money that can go into your savings account, towards a vacation, or maybe even towards a down payment on a house. So, good credit isn't just about getting approved. It's also about saving money. It's about showing lenders that you're responsible, that you can be trusted to pay back what you borrow. And in return, they reward you with lower interest rates. It's a win-win situation. So remember, maintaining a good credit score isn't just about accessing loans or credit cards. It's about getting the best possible terms on those loans and cards. It's about making your money work smarter, not harder. At number 3, we have better insurance rates. Now you might be wondering, what does my credit score have to do with my insurance? Well, the answer might surprise you. Many insurance companies, whether they provide auto, home, or even life insurance, consider your credit score when determining your premiums. That's the amount you pay for your insurance coverage. This practice, known as credit-based insurance scoring, is based on the idea that people with higher credit scores are less likely to file insurance claims. If we break it down a bit, it's like this. A good credit score can signal to insurers that you're responsible, not just with your finances, but in other aspects of life too. And if you're viewed as less of a risk, Insurers are often more willing to offer you better rates. Let's put it into perspective. Imagine two individuals, one with a high credit score and another with a not-so-stellar one. The person with the high credit score is likely to get a lower premium than the one with a lower score, all other things being equal. Over time, these savings can really add up. So, maintaining a good credit score doesn't just help you get loans or credit cards. It doesn't just save you money on interest. It also has the potential to make your insurance coverage more affordable. And who doesn't like saving money, right? Remember, your credit score might be the key to lower insurance premiums. So, keep that credit score healthy and watch the savings roll in. Number 2 on our list is the impact on rental applications. Now let's dive into this. When you're looking for a place to call home, your credit score can play a significant role. Believe it or not, landlords and property managers often peek into your credit history. Why, you ask? Well, they want to ensure that their tenants can make consistent and timely payments. Think of your credit score as a report card of your financial responsibility. A high score can make you look like a reliable tenant in the eyes of landlords. It's like being the teacher's pet, but this time, the teacher is your potential landlord, and the reward is the key to your new home. On the flip side, a low or poor credit score might raise some eyebrows. It could make landlords question your ability to pay rent on time. This could potentially result in your rental application being pushed to the bottom of the pile or, worse, rejected outright. But here's the good news. By maintaining a good credit score, you can increase your chances of being approved for a rental. It's like having a secret weapon in your arsenal when house hunting. So keep your credit score healthy, folks. Pay your bills on time, limit your debt, and keep your credit card balances low. Your dream apartment might just be a good credit score away. And finally, the number one reason why good credit is so significant: employment opportunities. Let's take a moment to dive into this. You've polished your resume, aced the interview, and you're feeling pretty confident about landing that job. But then, your potential employer requests to check your credit report. Now, this might seem a little out of left field, but it's not as uncommon as you might think. A number of employers, especially those in industries like finance, government, or upper-level management, may look into your credit history as part of the hiring process. Why, you might ask? Well, they see a person's credit history as a reflection of how responsible and reliable they are. A solid credit history could indicate you're someone who's dependable, who keeps their promises, and who handles obligations seriously. So, imagine you're neck and neck with another candidate for a job. You're both equally qualified, both equally impressive, but you have a good credit history, and the other candidate, well, they've had a few hiccups. Who do you think the employer would lean towards? That's right, you with the good credit score. Now, of course, your credit score isn't the be-all and end-all in your job hunt. Your skills, experience, and personality play huge roles too. But when it comes to that added advantage, that extra edge in a competitive job market, having a good credit history could potentially tip the scales in your favor and land you that dream job. Remember, maintaining a good credit score is not just about getting that shiny new credit card or that dream house. It's about opening up opportunities, creating possibilities, and giving you the freedom to make the choices you want in life, including landing your dream job. So, keep your credit history clean, your payments timely, and your credit utilization low, because who knows, a good credit score might just land you that dream job. So, those were the top 5 reasons why good credit is so important. Let's briefly jog your memory. First off, good credit is your golden ticket to getting approved for loans and credit cards. It's like having the secret handshake in a swanky club. You're in. Next up, we talked about how good credit can score you lower interest rates. It's like a discount that keeps on giving, saving you a pretty penny in the long run. Then, we delved into how good credit can get you better insurance rates. It's as if your credit score's got a little magic wand, making those premiums shrink. Fourth, a shiny credit score can boost your chances of rental approval. It's like a glowing reference letter to potential landlords. Lastly, we touched on how good credit can positively impact your employment opportunities. It's not the be-all and end-all, but it definitely doesn't hurt. Remember, good credit isn't just a number, it's a key to many doors. Until next time, keep those credit scores high.